Welcome to MexMoves by White Paper Media. I'm Damian Fraser, and along with my co-host Eduardo García, we'll be decoding Mexico's business and finance scene every week for an English-speaking audience. Our aim is to bring you the most interesting Mexico-related business and finance stories of the week, adding our comments and views to provide context and insight. A little bit about us. I'm British, but I've lived in Mexico for 30 years. I've been the Mexico correspondent for the Financial Times a long time ago, an equity analyst at UBS Investment Bank, and I now run Miranda Partners, a corporate advisory firm based in Mexico City.
Hi, everybody. Hi, Damian. I'm Eduardo García. I'm Mexican, but I've been working for English audiences for quite a while, as I was at some point the correspondent who opened the Bloomberg Mexico City office. Later on, I became the chief correspondent of Bloomberg here in Mexico. And after 10 years at Bloomberg, I ventured into creating my own publication targeted or specialized in business, economics, and markets. That was called Sentido Común, Common Sense. Later on, I sold that company to Infocell, which was the Mexican version of Bloomberg. And I left that company about a year ago, and I'm very happy to start again a new project, this time with White Paper Media alongside Damian Fraser.
Thank you, Eduardo. Well, for the most part, we won't be focusing on topics like politics, trade, immigration, or drug trafficking unless they directly impact business and finance. These issues are already extensively covered in the foreign press and some other podcasts out there, and arguably they overshape people's views of what's going on in Mexico. So why should an international audience care about Mexican business and finance? Let's give you some compelling reasons. Why does Mexico matter? Well, first, it's now the largest exporter to the United States. Overtook China last year with about $470 billion in exports, or 15% of all US imports, compared to 13% of US imports coming from China. That's $1.3 billion a day. Put that in context, back in 2017, China's market share of US imports was a whopping 21%, and Mexico's was just 13%. And this remarkable shift was driven by nearshoring, the strategic decision by mainly big companies to bring supply chains closer to home, and also has been propelled by a significant increase in US tariffs on Chinese goods. A key example of Mexico's growing relevance to the US is the border city of Laredo, Texas. Laredo now handles $275 billion of trade annually, about $830 million a day. It alone matches the trade volume of the Port of Los Angeles, the busiest US port for goods from China and Asia. Every day, about 8,000 tractor-trailers filled with goods from flowers to lettuce to car parts pass through Laredo, making it by far the busiest land port in the United States, thanks to its border with Mexico.
And if that wasn't enough, Mexico has also become, in the last 3 decades, a global powerhouse in automotive production. It exports $100 billion worth of cars and car parts to the US annually. The industry on its own employs over a million Mexican workers, supporting the supply chains of major automakers like General Motors, Ford, and Stellantis. Mexico's competitive labor costs and proximity to the US markets have cemented its role as a critical player in this sector.
Third, I'd highlight the food supply chain. Mexico, as many of you will know, provides about 90% of avocados to the US, and of imports, 70% come from Mexico. 50% of fresh fruit imports come from Mexico. 70% of US fresh vegetable imports come from Mexico. Without Mexico, US food prices would be significantly higher, especially during the winter months when American agricultural output declines. The diversity and affordability of fresh produce in the US owes a great deal to Mexico's agricultural exports.
Let me just say that for those skeptical the relevance of Mexico to the US, Mexico is also a significant importer of US goods. It purchased $325 billion worth in 1923. It would be a bit higher for the last year when the numbers come out, which would not be too long. This figure includes $16 billion in natural gas and $40 billion in refined petroleum products. With Mexico's energy industry struggling, the country has become a key buyer of US energy exports. In fact, Mexico's state-owned electricity company, CFE, is now the largest purchaser of US natural gas. I would just add that because of these imports, hundreds if not millions of US jobs depend on the Mexican economy.
And focusing on tourism, Of the 100 million trips Americans made abroad year before last, about 30 million were to Mexico. By comparison, only 10 million were to Canada and just 4 million to France. So without Mexico, American vacation options would be a lot more limited and probably a lot less fun.
We can see that on Mexican streets, Mexico City streets, which are not used to be a destiny for tourists. But now some neighbors in Mexico, you hear more English sometimes than Spanish. Let's also talk about the potential growth of the Mexican market for U.S. companies. Many American companies rely economic activity from Mexico. Walmart, all of you know this company, derives nearly 8% of its global sales from Mexico. And GM and Ford and Stellantis employed over 100,000 workers in this country. For companies like Avon, Coca-Cola, PepsiCo, and Mondelez, Mexico is among their largest international markets. Mexico's 130 million population has long been accustomed to buying U.S. products, making it a critical driver of revenue for some of these firms. The complexity and the variety of U.S. products that you see on supermarket shelves in Mexico is unprecedented. When I was growing up in Mexico, many years ago, you couldn't see any US products. You had to go to the black market to buy Sweethearts or Milky Ways. Now they're all sold everywhere, and they, in some cases, come from the US.
So we've heard a bit why you should care about Mexico business and finance if you're an international listener. And what we're going to do every week is focus on 4 or 5 stories that we think are of particular interest that are coming from Mexico. This week, we want to look at the Walmart Mexico and COFECE ruling. COFECE is Mexico's competition authority. We want to look at Citigroup plans to spin off its Mexican retail bank, Banamex, which made progress. We're also going to look at Platacard, which is a fintech here, and its bank license. We're going to look at Talos Energy and Carlos Slim. And then finally, some changes in Mexican tax regulation that's going to put new taxes on imports from mainly Chinese and the Asian e-commerce players like Shein and Temu. So do you want to kick off with the COFECE, what you make of that, and maybe just give a little bit of a brief intro to what happened?
Why not? In Mexico, Walmart is called, or popularly known as Walmex, which was the ticker under which it trades in the Mexican Stock Exchange, if I'm not wrong. And over the last, 30 years or so, Walmex has become the largest retailer in the country. It holds a 30% share of formal retail sales, higher than its U.S. corporate company, which holds 23% share in the U.S. market. This makes Walmex proportionally more significant in Mexico than Walmart is in its home market. It achieved this position by acquiring Cifra, Mexico's largest retailer, in 1991, in what was then a groundbreaking transaction and preceded the implementation of the North American Free Trade Agreement. Walmart saw that coming and took advantage and acquired the largest retailer in the country. And since then, it has consistently grown its market presence, dominating different categories like groceries and general merchandise. But recently, the antitrust authorities here fined Walmex with a $5 million tag for allegedly pressuring suppliers to avoid offering better terms to competitors. Initially, Walmart shares rallied 8% on the relatively small fine. However, COFECE followed up with stricter rules, including prohibitions on requiring suppliers to provide price information or the best prices exclusively to Walmex. These were thought to be anti-competitive or anti-monopolistic practices in the retail industry in Mexico. So these new measures raised concerns among investors about potential fines for up to 8% of sales if Walmex failed to comply, or if it reinstated some of these practices after withdrawing them. Following this announcement, Walmex shares gave up much of their earlier gains. And the case highlights a critical moment for COFECE. Mexico's watchdog is gonna, or has lost its autonomy, and in the next 3 months, it will move under the control of the economy ministry. Critics worry that COFECE could become politically influenced, favoring allies and punishing opponents. Interestingly, the original complaint against Walmart came from Chedraui, a smaller but powerful competitor owned by a prominent Mexican family. The question in everybody's minds now is whether COFECE's ruling will remain impartial or become a tool for political and corporate influence in Mexico. That coin is still up in the air. For Walmex, the stakes are high. Mexico is a core market, contributing nearly 8% of Walmart's global revenue. Any operational restrictions or penalties could significantly impact its bottom line. Additionally, Walmart's ability to negotiate with suppliers is key to maintaining its competitive pricing advantage. This case is being closely watched not only in Mexico but by international investors worried about the country's regulatory climate. So we'll have to wait and see. I don't know if you have anything to add, Damian.
My sense is the Walmart people in Bentonville will be, relatively pleased with the outcome of the long-awaited Confesse investigation. Obviously, the fine itself is quite immaterial. I think Walmart will be able to follow these new restrictions without a big problem, and they'll be able to put this behind it. That said, Walmart is challenging the ruling, so it'll probably take another year or so before we get a final resolution. But I think everyone is wondering how Confesse will operate now that it's no longer constitutionally independent and is part of the economy ministry. Will it be basically the same, just with a new corporate kind of identity, or will it be subservient to political interests? What we do know is that their budget has been slashed. In fact, Confesse a couple of days ago put out a press release complaining about that, saying it wasn't going to be able to do its job. And the reduction is pretty dramatic. Apparently, they're going to be cutting its budget by as much as 65%. It's going to be difficult to conduct these kind of investigations, which went on for about 3 years, I understand, with its much lower budget.
I would just add one element, Damien, to what you just said on Confesse, and that is the arrival of Trump to the White House and how the U.S. is going to view the stripping of its autonomy regarding the free trade agreement. Obviously, the Mexican government has been careful. Apparently, they gave it some technical independence. Whether this will please Canada and the US regarding some of the stipulations that the free trade agreement had, we'll have to wait and see. And as for the Walmart complaints, I have a relative who deals with Walmart, and he used to tell me how hard it was to deal with Walmart, how pressured they were to give them the best prices. Recently, I saw this relative, and he told me that it has changed. So I don't know whether the chicken or the egg, but I think Walmart has already modified its conduct with some of its suppliers to lessen the tremendous pressure they gave them to give them the best prices regarding anyone else in the market. So I think Walmart is already on the way to comply with Confesse even before the ruling came out.
Yeah, well, I'm a happy Walmart customer. I love the low prices and the variety
We all
that they bring. So I very much hope that they continue to play the role they have done in Mexico over the last 30 years in making many goods more affordable for the average Mexican consumer.
I was even sometimes wondering whether the central bank owes Walmart the advantages it has brought to bring prices down in a certain way, because it is a very powerful company, and prices in Mexico have been stable for quite a while, and maybe Walmart played a role in it, not interest rates. It's a fun fact. So some economists that might be listening, they might want to investigate that.
So let's move on to Citigroup and its kind of protracted efforts to spin off its retail bank in Mexico, which is known as Banamex. And I think it's a case study in how complicated it is for a global bank to manage a local bank in an emerging market like Mexico. So as many of you know, Citigroup acquired Banamex in 2001 for $12.5 billion. At the time, it was the largest M&A deal in Mexico's financial history. And at the time, Banamex had a dominant position in the financial sector, had 20 million customers and 1,400 branches, and had, by Mexican standards, relatively affluent and profitable customers. But since then, in the 23 years that have gone by, I think it's fair to say Citigroup's management of Banamex has been less than stellar. It significantly lost market share to more nimble competitors, like especially BBVA, which used to be known as Bancoma, and then was bought by BBVA in Spain and rebranded BBVA here. Banorte, which is the local champion retail bank, and Santander, like BBVA from Spain. For example, according to a recent report in White Paper's brilliant daily bulletin on Mexican business, which you can subscribe to on Substack, from 2010 to 2023, Banamex market share in credit cards fell from 30% to 23%. Its market share in personal loans from 26% to a dreadful 8%. Payroll lending market share went from 27 to 15%, business loans from 16 to 7%, and so on. And I think this, shows how, as I mentioned earlier, how difficult it is to manage a bank from afar, although BBVA has managed it. And in a way, it's slightly different because BBVA Mexico is now more than 50% of BBVA Spain. So it gets all the attention that it needs, whereas Banamex is probably about 5 to 10% of Citigroups, it gets a lot less attention. Talking to friends that have worked at Banamex or at Citigroup in Mexico, they attribute this to the slow decision-making process, high operating costs, lack of focus on innovation, and after a string of scandals, a huge focus on compliance, which has made things difficult to manage. As a result, Banamex went from being the market leader that I mentioned to trailing in most of the key metrics like profitability, deposit, and credit cards. Probably in response to that, back in May last year, May of 2023, Citi announced plans to spin off Banamex or to sell Banamex, Plan A or Plan B. And this then turned into a decision to IPO it when the attempt to sell it outright to Grupo Mexico, a mining and transportation conglomerate here owned by the billionaire Germán Larrea, fell apart, probably due to interference from then President López Obrador, who seemed to oppose selling Banamex to a private entity, or at least made it very complicated for that to happen. This IPO plan is coming at a challenging time. Mexican bank stocks have performed poorly, with Banorte and Santander trading at very low price to earnings ratios due to concerns over the government's new constitutional reforms that have, in the opinion of some at least, eroded the rule of law in Mexico. And Banamex's poor track record over the last 20 years as it added to investor hesitations. The IPO is probably the only way for Citi to divest its stake and get rid of this entity that hasn't done well under its ownership and might give Banamex a fresh start as an independent entity. There's still the possibility that at the last minute a bid comes from one of the Mexican business groups or from an existing bank, and I think Citi would welcome that if it happened at a reasonable price, because the IPO process will only begin with the initial selling of capital, but will require at least 2 or 3 different equity offerings for Citi to get rid of its stake in its entirety. Given the size of Mexico's capital markets, it would be practically impossible to sell the whole thing at once. So the final spin-off, Banamex started operating as an independent entity, albeit still owned by Citigroup, in December, a month ago. And the plan is that in the fourth quarter of this year, the IPO will happen. They'll probably end up selling 25% of the bank, and then in subsequent equity offerings, reduce its stake to zero. How do you see this process, Eduardo?
I think Citi faced challenges when López Obrador indirectly, or should I say, forbade Citi to sell it to a foreign entity. He wanted the bank to be in Mexican hands, and so that by itself lowered the pool of potential buyers. There are still a lot of questions of the IPO in the sense that in Mexico we don't see companies that are run with a 10 or 20% interest. Generally, the families own 50 or more than half of a company. So for Citi to be selling gradually its stake, who's going to control the bank? Who's going to make the decisions? It's a big question that I've heard among some investors. And how is this going to work out when Citi decides to not have the control? Or will the IPO be sold at the same time that it gives a stake to a group of investors that will control 25% of the company or so? I don't know. There's still a lot of questions, I think, in the air for this transaction to
Yeah, I mean, the management's in place, the board is in place. So I guess like in the US, like in most of Europe and many parts of Asia, the board will supervise the management. And they'll get on with running the bank, and they'll have stock and options to incentivize them to do a good job. You're right in saying it's atypical in Mexico. The majority, but not all, but the majority of companies are controlled by families or by foreign multinationals like Walmart. But there are cases which work reasonably well where there isn't a control group, like the Mexican Stock Exchange, which is the BMV, is listed in the stock market and doesn't have a control group and is run reasonably efficiently. So I don't think it itself is a deal breaker. But I do think that over time, maybe not before the IPO, but at some time after the IPO, or maybe concurrent with the IPO, a scenario in which a control group turns up and buys Citigroup's controlling stake and lets a minority stake be listed in the stock market is something that's probably more likely than not. But if that doesn't happen, then of course you could have a situation like you have in capital markets around the world, where it's a company whose management is supervised by a board that are picked by shareholders at the end of the day.
I would love to see that. I think that would be well. You mentioned the stock market floating its shares without a control, but generally that's not the case in Mexico. It would be, I think, it would be fantastic to have that democratization of investment in one of the most important banks in the country. So hopefully we can see that and working for the benefit of the bank, because, like you said, it's been like it hasn't had a very clear strategy to hold up what it used to be Banamex in Mexico. So I think it's time. I think it would be healthy change for
So talking about the banking sector, what do you make of Platacard getting its banking license?
them.
I think it's one of the more interesting stories in Mexico, one of the more unusual stories in Mexico.
I'm gonna let you talk about it because you're the one who's been following this much more than I, and I think you know the ins and outs of the transaction. I think it's very interesting.
So, well, thank you. Plata Card is a fintech here in Mexico, and it's run by former top executives at a former top fintech, still a leading fintech in Russia, called the Tinkoff Bank. When Russia invaded Ukraine, Oleg Tinkov, the founder of Tinkoff, criticized the invasion and was forced to leave the country and at the same time dispose of his stake to Putin friendly oligarchs. A lot of the top executives of Tinkoff left Russia, and they found funding from a private equity group called Baring Ventures, which was a leading investor in Tinkoff, to set up a fintech here in Mexico and basically follow the Tinkoff model. Why were they drawn to Mexico? As they didn't have, as far as I know, any specific kind of affiliation with Mexico, because Mexico has quite an underbanked market. Its credit penetration is much lower than similar countries like Brazil or Chile or even Colombia, because the incumbent banks, BBVA, as we mentioned, Banorte, Santander, are very profitable. So they came here, they raised money from Baring Ventures, and quite quickly they've been able to gain a fairly significant presence in the credit card business. They now have, I believe, about 1 million credit cards in Mexico, and I understand at least that they have better metrics than some of the other credit card fintechs like Nu or Story or Klar, although I don't have all the data. And that, if it's true, it's based on their very data-driven approach. To give you an idea, in Mexico, I understand they have about, in the head office, several hundred people, but about 150 to be precise, and maybe half of those are data scientists or statisticians or engineers with a background in Russia or Eastern Europe that are new to Mexico. And then outside Mexico, they have another 350 employees in corporate, and almost all of those have a background in Russia and Eastern Europe, and also most of those are engineers or data scientists. So it's a very data driven approach, and that has helped them. But they've also married that with a very physical approach, where in order to get a Plata card, you have to receive in your house or in your office a what they call as an ambassador, who basically checks whether you exist, whether your identity corresponds to that you've filled in the forms on, and that has helped reduce fraud. And none of the other credit card companies do that. The fintech credit card companies, the ones I mentioned like Nu and Klar. So you have this kind of juxtaposition of this very data-driven approach, which has helped them acquire clients at a relatively low cost, reject bad clients, and then combine that with a very physical presence. They have more than 1,000 ambassadors in Mexico, and they're on payroll. They're not outsourced, and they're knocking on people's doors. And as a result of that, their first time fraud rate, basically when someone gets their credit card and doesn't pay the first month, which is fraud, not in almost every case, not lack of ability to pay, is very low by Mexican standards. And this playbook comes straight from Russia. So we have this Russian-inspired fintech in Mexico that's done very well. They applied for a license and they got it, and now probably take them another 9 months to get all the IT and other stuff in place. They aim to be a fully fledged bank in Mexico, receiving deposits, and they're already offering the opportunity through their platform to invest in stock markets, mainly in the US, and they're already offering personal loans. So we'll see much needed competition in the Mexican banking sector, which should help make Mexico a more attractive place to get loans and to get good yields on your deposits.
Do you feel, Damian, that, Plata is one of many fintechs that have recently appeared in Mexico. Is it a crowded marketplace, or do you think that lack of penetration in the Mexican financial services in Mexico, there's room for all these new players?
I think there's room for all the additional credit cards that have been emitted over the last couple of years by fintechs, but there might be too many players, so there would be some benefits for some consolidation.
Okay.
But I don't think the consolidation would lead to a reduction in the amount of credit being allocated in the country. Mexico's been very underbanked. But if you've got some consolidation, you would help improve the profitability of these fintechs. All of them right now are losing money. So if you consolidate, you could take out some costs and generate better profits for the same amount of revenues.
And from your point of Plata, with this dual model of digital with physical, is doing better than the other ones, at least.
I don't have all the information because they're not
Not
public
publicly.
companies, but talking to different industry sources, they've been positively surprised by how well Plata's doing, and I think people were also surprised that they got their banking license, which is a very rigorous process in Mexico, a very time-consuming process.
Yeah, many are asking for this license and they're still waiting on the sidelines, and Plata managed to obtain it faster than others, probably. Fascinating story.
So if you hear Russian being spoken in Polanco, you know
Who?
you know who.
I'll practice my my Stolichnaya Russian, I guess. Let's talk quickly about Slim and the energy sector. As you know, Slim has been, despite, or how should I frame it, the opposition of the current and past government against private investment in the energy sector in Mexico that was opened up in 2013. Slim has been quietly but surely, like he always does, been buying assets in the sector. He has an energy subsidiary that belongs, if I'm correct, to Grupo Carso. It's industrial, retail, and many other things business. And recently he's been on the news by extending or acquiring first a minority stake in the Talos energy subsidiary of Mexico. Then he also purchased the energy company of the Valleres family. And he has also been tinkering probably with acquiring a larger stake in the US of the Talos, the parent company of the Mexican subsidiary that owns the oil field called Sama. So there is movement in that sector, despite, like I said, the government's opposition to private investment in oil or electricity. However, Claudia Sheinbaum, the Mexican new president, has hinted of a little bit more openness, not on the constitution itself, because she reformed it to give the two Mexican state-owned companies, Petróleos Mexicanos, Pemex, and CFE, the electricity company, total control of the sectors, while she has also disbanded the regulatory framework that was supposed to have a level playing field for private companies versus the state-owned companies. But what's your stake? Why do you think Slim is still entering this sector despite all the odds against it?
Well, I think if you have, probably everyone knows, Slim is the richest businessman in Mexico by a long way, more than 3 times the net worth of the second richest businessman. He also has a very good working relationship with this government, has a long history with Claudia Sheinbaum. And so he's probably less worried, and rightly less worried than most, about the disbandment of the autonomous agencies, because he can negotiate bilaterally with the government.
He knows how to do that, doesn't he?
To protect his interests. So, and that's probably why we saw this deal in December of last year with Talos. Just to recap, as Eduardo said, there's a long, fairly complex history, but the resolution is that Slim capped his stake in Talos, the holding company based in Houston, at 25%, and promised not to go above that at some point. There were concerns in Houston, in Talos, that Slim was going to do a hostile takeover for Talos itself. And Slim raised his minority stake in Talos's Mexico business to 80% as part of that same deal, the Mexico business is a minority stake in a very promising oil field called Zama that's owned by was Talos, now Slim's entity, and other international oil firms, DA Wintershall among them, and Pemex, which has 50% of it. But that some people expect Zama to get to about 180,000 barrels a day of oil, which would be more than 10% of Mexico's total oil output. So I think Slim is betting that Mexico needs to invest in oil. Pemex is very, very short of money, and that he can protect his interests thanks to his political and financial clout. And I think Zama's reckoning, while doing this alone, is going to be challenging, as we saw, because they originally controlled the Zama field, and the regulator effectively took control away from Talos and gave it to Pemex. So they felt they couldn't really operate in Mexico successfully. And this playbook of Slim that it's been 40, 50 years where he's taken assets, bought assets from multinationals that have struggled to succeed in Mexico at bargain prices and then been able to extract value, thanks to him being a brilliant businessman, and also thanks to knowing how to navigate the sort of political and regulatory landscape in the country. So it's an important story, I think. Mexico's oil production has been falling quite
Dramatically.
consistently because of Pemex's financial woes. So I think it's good for the country that Slim is involved and is putting his capital to play. And no doubt he'll be leaning heavily on Talos's know-how, which is second to none. They're also expert operators.
Yeah, you're right. The situation at Pemex is dire, to put it mildly, I guess. Mexico needs to extract more oil. Maybe Carlos will convince Claudia and company that he knows how to do it and he could bring profits to Pemex and to the government. So one thing that one has to admire about Slim is his long-term view of things, and he's patient to capitalize on transforming what he buys for the benefit of him and his investors. So yes, it's something we will be looking at as it evolves.
And just to wrap up for this week, a couple of days ago, the government announced important changes on import duties in Mexico. The previously products valued at $50 or less came in duty free, and both Chinese e-commerce giants Temu and Shein benefited to a large degree from that, as they were able to get individuals to buy products direct from China or Southeast Asia valued less than $50 and avoid any import tax. Whereas ordinary retailers that were buying from China or other countries were buying them and putting them in warehouses and paying the full tax, which can be from 17 to 20% or higher, depending on what the good is. That exemption for goods under $50, the de minimis exemption, was removed. So now Shane and Temu will have to pay the tax, and it will remove the tax advantage that they had. And at the same time, Mexico's also put import taxes on textiles of 35%, which is aimed most likely against Chinese imports and to protect the domestic story. I think that Mexican big retailers will be very happy with this announcement. I also think that the U.S. government, which is sort of being concerned about Mexico being a backdoor to Chinese expansions and business interests, would also be quite happy. And that comes as we begin, to look at the Trump presidency and what he's going to do with USMCA. So that's a big development, and we'll see how it unfolds. But for sure, the big Mexican retailers will be delighted with this development, and it's a trend that we're obviously seeing around the world towards a little bit more protectionism and a little bit more removal of tax loopholes.
I couldn't agree more with you. And I think the textile sector is also very pleased with the 35% tax and the greater supervision that the government will also take on those textiles or clothes that were coming in to be assembled and later supposedly exported. Those textiles or clothes were tax-free as long as they were exported. Some of those never left the country. It was unfair competition for many cloth manufacturers and textile manufacturers in the country. So these rulings, and I know for sure that are very welcome by many textile manufacturers in Mexico who have been struggling and have been asking to close these loopholes for years. And their claims landed in deaf ears, and they are finally being heard, and I think they will be happy. They told me that they wonder if it wasn't too late. Hopefully it won't. We'll see.
That's it for this week's top Mexico business and finance stories. Thanks for tuning in, and we'll see you next week on MexMoves by White Paper Media.
Goodbye, and thank you for listening.